Okay, great. Welcome back. So this is the last video in this playlist, so we're going to give you some final advice. You know, we've talked about the broad conceptual parts of entrepreneurial finance and accounting. We've gotten into the nitty-gritty with the different statements, and now what we're going to do is kind of end it with a holistic sort of video. And we're going to talk about some ways to make sure that your accounts receivables are paid, and also just some broad holistic terms to make sure that your finances are easy to understand for external stakeholders like venture capitalists, bankers, stuff like that. Okay. So the first thing that you got to think about with receivables are a nightmare because you have rendered a product or service to a customer and you have not been paid. So you're waiting on money. So like it's technically money, like if you're looking at, for example, an income and a balance sheet, but it's not really money when you look at your cash flow statement. So you're waiting on money to come in, but you don't actually have money in the bank to pay a supplier. That's real bad. So here's some advice to help you make sure that your receivables get paid. First of all, remember, the customer is not always right, okay? Know when to walk away from a customer. There are some customers that are going to be so difficult to deal with and so delinquent in their payments. Remember, the time that you spend hunting down a customer to pay you, that time has a cost. You could be doing other things in your firm than worrying about whether that customer is going to pay or not. There are some people that say, you know what, you are consistently delinquent. I've warned you. I've tried to work with you. I've had enough. No thank you for your time, no thank you for your business, and no thank you for not paying me. We're through. Now I'm going to focus on customers that actually pay. So don't hesitate to walk away, or at least know when to walk away. Now, one of the things that I think can be useful in preventing too many accounts receivables, a lot of entrepreneurs, and of course because you've been watching the playlist, you know all this stuff already, but a lot of entrepreneurs don't use Excel or QuickBooks or any sort of a software package to track the receivables. It's really hard to know who your receivables are or what your receivables are when you don't even have any sort of tracking system for them, right? So you need to track them so you know who to ask for payment. I mean, I know it sounds like duh, but you'd be amazed how many entrepreneurs don't do this. Okay, and that goes back to not winging it. You know, we talked about, critical cash flow rules to remember. You cannot remember your receivables on a cocktail napkin. You need to have some sort of a system in place for tracking everything. Okay, and going along with that, once you kind of know who to ask, don't start off on the wrong foot with your customers. Have some sort of procedures in place and some sort of a plan to deal with delinquent customers. Okay? And deal with all of your customers in the same way. You got to remember, don't think that customers are necessarily always honest. They will walk all over you if they can. But if you've got procedures in place, that can keep you from being taken advantage of. And going along with that, you've got to remember that the squeaky wheel gets greased. If you have delivered a product or a service to a customer, you have upheld your end of the bargain. Do not be shy about asking them to pay you what you're owed. A lot of them are like, well, I hate the confrontation. Forget that. They're walking all over you, and you're going to get a reputation as somebody who's a joker. So the first thing you got to do, you got to be in regular communication with your customers. Send them reminders that their bill will be due soon. And when that bill is not paid, what do? You send them emails. You call them. You go to their place of business and ask for payment. You continue to do this until they pay or until that point where you decide, it's not worth it, I'm walking out. I worked with this one lawyer, and he was an entrepreneur. He had his own little law firm. And what he would do is as it was getting kind of close to the bills being due, he would start sending reminder emails, reminding people to pay. And once they were past due, he would send an email. I think he started like every week he'd send them an email, and then eventually he'd just send them like an email every day and then a couple emails a day, and people would finally pay because they'd get tired of seeing the emails. I mean, they weren't going to forget. That was a procedure that worked for him. But either way, ask for what you are owed. That's huge. Okay? And that goes along with asking for what you're owed. Sometimes the people that pay the bills in a firm are not the actual decision makers. So have a buddy in that firm who is in a leadership position, who is a decision maker. That way you can call, hey buddy, did you know that I haven't been paid for the last 90 days? What's going on with accounting? Oh my goodness, I am so embarrassed. Let me take care of that. Okay? They can squeeze accounting for you because they can make those decisions of who gets paid first. So get a buddy in that firm. Again, that goes back to the importance of social capital as a small business owner. The other thing that you can do is provide discounts for early payment. Now we also have the 210 rule, net 30 days system in the US, which is kind of common. In other words, if someone pays within 10 days of receiving the invoice, they get a 2% discount, but they have to pay the full amount within 30 days. That's another way to do it. Or finally, you can request payment up front. Now you can just say payment up front, period. Now a convention that I've seen a lot in the Middle East that I like personally is if people pay a certain amount up front for like a reoccurring service, they get a discount. And I think in a lot of Middle Eastern countries, it's like they get 10% off if they pay 3 months in advance, 25% if 6 months, and I think they get even more if they pay for a year in advance. And that really incentivizes you to pay not only on time, but early. So that's another way that you can incentivize people to pay up front. Cool. So the other thing that you need to think about is how do you piece all this together in a way that's holistic and makes sense to an external audience? First of all, you need to make sure that these finances in some way tell, and you're going to hear it again, you have to make sure the finances, like everything else, tell a coherent story, have a coherent narrative. Don't exclude things like timelines in your financial statements. Make sure that you're very honest about how much money you think you will actually need and be able to explain why. Make sure that all of your plans are precise. You may want to have like a little narrative sheet so that someone who, before they even look at your numbers, can be aware of the things that they need to pinpoint. Certain facts and certain figures, certain things that you think are important, and include some sort of an explanation. Like a one-page narrative sheet has never hurt anybody. If the pure numbers people don't like it, they'll just skip it. But I think this is a good thing. It can also help people connect the dots within all of your numbers as well. Along with precision, the way you have that narrative sheet on there, you can also include how you're defining terms and what some of your base assumptions will be. That way it's very obvious to whoever's reading the plan. You might even include a legend in your narrative. Maybe you have certain things that you're doing or certain names for things that are a little bit unusual, which try to keep these plans as boring or not creative as possible if you can. But if you have like peculiar terminology or strange names for customer accounts or something that may not be clear, include that in the narrative sheet. You don't want an accountant to be confused as they're reading your plan, and you definitely don't want a banker or a venture capitalist. Bankers are going to call because they're going to be mad. Venture capitalists are not going to fund you. So if you need to include like a narrative sheet with all the stuff to pinpoint, do that. Also make sure that, going back to your assumptions, that they're realistic. Now maybe you make some assumptions that are different than what the person is reading is. You have a difference of opinion. That's not such a bad thing to say. I disagree with that. This is what it's going to be. And you can agree or disagree on that, but whatever. But if you have something out there that's just totally crazy, that's not going to work out well for you. So make sure that you are realistic in your assumptions. Also make sure your financial plan is simple. Sometimes people like to put like long detailed analyses of how like they came up with this prediction or that. If you really feel the need to do that, include it like in an appendix, but don't try to like bog it down in your actual financial reports. I mean, people don't want to read all that. Say if you want to know more, read the appendix. If they want to read the appendix, they will. If not, they won't. And make sure all of this stuff that you've got is accurate. Okay? Avoid things like typos. Yeah. People can actually misspell things on a document that's mostly numbers. If you forget like really basic costs or revenues, or you leave stuff blank or things that are weird, focus on the little details, because if you don't do the little details, they're going to think that you don't understand the big picture either. So you got to have these things in place. Focus on the basics too. Cool. So I hope you've enjoyed this playlist. If you have, Give me a thumbs up. That's also like a like. You can subscribe, or you can comment down below. I hope you've enjoyed this entire playlist, and I'm looking forward to seeing you in the next videos.